Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on euro currency. So here the great standing continues. So we see that market trying to move higher, but the situation changes very slowly. So it was really very slow upward direction on euro currency. But there are some changes that we have on intraday charts that could be the sign that probably market could start upward continuation without any deeper retracement as we thought initially. So because as few moments have happened, that significantly decreases chances for this scenario. So on the 4-hour time frame chart, we do not have any big changes. So in general, market keeps the shape of the hand and shoulders. It keeps the lows of the right arm. So from the theoretical point of view, everything stands more or less normal. Yes, we already talked many times about the slowest action here. So market is really very heavy without any acceleration. But no, from the theoretical point of view, nominally, we do not have reasons to talk about the failure of the hand shoulders yet, because this market keeps lows and actually hand shoulders still could be formed. So currently it is too early to speak about possible taking the short position and taking position on a failure of this possible pattern. And probably we should wait and see what will happen. Besides, as you know, yesterday's was ADP report. It was significantly worse than expected. So the data for November was just 20,000 less than expected, but it was big revision down on the September numbers. And together it was a drop approximately for around 50,000. So it's really very big amount. Recently, it is true that recently a correlation between the ADP and non-farm payroll was significantly lower than it was previously. But still, this might be the sign that payrolls might be not as good as market expects. And from that standpoint of view, we, of course, would not expect some really long-lasting performance, but within the Friday, it's easily might be some upward action here, if data will be worse than expected as well. So this is what we have in mind. Now, speaking about the technical signs, here's what we have on the hourly chart. Take a look. This market first has erased this downside ABCD, just because yesterday it was action above the C point. So mining rubber that we talked about yesterday here has worked, so it has reached minimum target just above the stop, right? Second, the pattern has been erased without the completion of the OP target. If you remember, previously one of the reasons why we discussed possible deeper downside action is just existence of the OP target that has not been reached. And now the pattern has been erased even without reaching the OP. This could mean something, that in fact market has some bullish potential and it could keep going higher. The important moment here will be if market will return back in this consolidation. So you can see currently price protects it against the price returning back and penetration of this area with this, you can see, area here. But once market will return back inside of it, first of all, it will close the gap that exists here. Second, it will get the free area for fluctuation. So road to 10560 area will be open. So market easily could keep going higher in this case. So this will be important. As a result of yesterday's session, we've got Gartley steeple to sell, but mostly it's already completed because here's retracement already has happened. Finally, another reason why actually euro could keep going higher is a picture on the fall time frame chart on the British pound. Recall what we talked yesterday. So not on 4-hour time frame chart, but on hour. Recall what we said yesterday, that here we have the hand and shoulders that theoretically could trigger downside action, a bit deeper retracement on the cable, and euro could follow it. But you can see what's going on now. here market actually erasing this potential pattern, challenging once again the next line. So on the fall time frame chart, everything looks nice, very similar to the euro, but euro is still somewhere in the bottom of the right arm, while the cable already near the leg line. So this also might be indirect sign that some strength exists in the market, and theoretically euro could try to also to keep going higher and challenge the resistance. So from that standpoint of view, in the new environment, after the mentioned steps, that market actually hasn't given us any chance to buy at a better price with a deep retracement. Here's once again returning back to the question whether it makes sense to split positions or not. In the current circumstance, what we could do, our task here is we would like to buy. We should do this as close to the lows as possible. What the risks exist? Risks that probably we could get some kind of the big ABCD. This is also possible because upward direction remains, as you can see, very choppy. So it means that if you would like to buy, it would be better to do this as close to these lows as possible. So if, for instance, we will get deep retracement here, theoretically it might be done. Or another option that actually we could follow, maybe even better solution here, is wait when the market return back in this consolidation. Once this will happen, bulls will get additional stimulus, and it would be better to take position on the retracement after this will happen. So by this action, euro could prove some strength here. So this is what we could consider currently on euro currency. In general, you can see overall price performance and overall background is not very impressive. So overall price action, well, it's a bit slow, and which brings some doubts in perspective of this bullish pattern. But at the same time, currently, actually, we do not have any reasons to, as I said, speak about possible its failure, because nominally market still keep the shape and doesn't show the break below the low. So if market will return a big down and drop these lows, that will be a different story. But by far, we do not have any reasons to consider new shorts on the daily chart. And here we could think about taking some longs position, but trying to do this very carefully with the minimum possible risk. So this probably all that we could say currently about the euro. Maybe action today will be relatively slow, just because nobody would like to take more risk at the eve of the payrolls report. So markets will be waiting for the numbers.